Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with the major EURUSD 10% On Tuesday, the EURUSD pair rebounded from the 127% retracement Fibonacci level 1.1712, but the upward movement continued after a close above that level. As a result, the bulls may continue pushing the price toward the next retracement level at 1.1802. A consolidation below 1712 would support the US dollar and suggest a potential decline toward 1.1645. The wave pattern on the hourly chart remains simple and clear. The last completed downward wave did not break the low of the previous one, while the most recent upward wave broke the previous high. This confirms a continued bullish trend, despite a prolonged correction. The lack of real progress in US trade negotiations, the low probability of reaching agreements with most countries, and the prospect of further tariff increases continue to create negative conditions for the pairs. On Tuesday, there were virtually no notable developments, but over the past few days, several reports emerged indicating that trade talks between the European Union and the United States are reaching an impasse. On the 4-hour chart, the pair reversed in favor of the euro and consolidated above the 1.1680 level. Earlier, the euro had closed below the ascending trend channel, and we're still hesitant to declare the start of a bearish trend. At the moment, the hourly chart appears more informative. The pair exited the channel not due to bearish strength, but due to the duration of the correction. The upward movement may continue toward the 161 Fibonacci level at 1.1854. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look.
Yesterday, the British pound added another 41 pips to its corrective cycle from the 1.3369 support level seen on July 16. However, once again the price failed to break above the balance indicator line. It's a red line on the graphic. The Marlin oscillator's signal line moved above the axis to its descending channel, but it's showing signs of a reversal near the boundary of the bullish trend territory. Another scenario is now coming into play. A rise of signal line oscillator toward the upper boundary of the channel, followed by a downward reversal and breakout. On the price chart, this could manifest as growth toward the target level of 1.3635, followed by a decline toward 1.3233. Alternatively, the price could retest 1.3369 support, bounce from it upward, and still head directly toward 1.3233. In any case, the pair remains within a free-floating range. On the 4-hour chart, the Marlin oscillator, despite yesterday's impulsive upward move,
is leaning toward a breakdown below the ascending channel. Still, even if the channel is breached, the price is unlikely to reach 1.3369 unless it consolidates below the MACD line. It's a blue line on the chart, which is currently near the 1.3457 level.
That's all for today. See you online soon.